Millennials are heavily in debt today. Let's dig into some of the details. Millennials are so heavily in debt that it has become such a burden on them financially. They are now in a state of regret. Costs are adding up and the debt only gets worse. Of course, the predatory lending institutions are there to force as much onto you as they possibly can. They want to maximize the product that they sell, and so they do. Millennials are already starting to feel the burn, and it has only just begun. You came here for the truth, so let me unveil that for you. Today we are going to talk about millennials and their debt. I believe that this is pervasive not just in the United States, but we are seeing it in Canada, the UK, Australia, New Zealand, and so on. We are talking today about what's happening with millennials getting into the homes and then getting in over their heads. This data comes from a bank rate survey that I'll show you in a moment. I've got charts, I've got articles associated with it, and I do believe it's important to look at this information and then start looking around and see the house of cards that has been built and unfortunately must fall. Out of Bloomberg, about 1 in 5 millennials say that student loan debt is holding them back from home ownership. This is coming from this survey here. And of course, when you see this amount, it's obviously much worse. But what I want to advise is that whenever you're looking at a survey, understand there's only so many people that they survey. This doesn't give you the big picture, but it gives you some insight. So in this case here, I believe they surveyed 1,500 people. All that's doing is giving you insight into what's happening. The numbers are not necessarily accurate, but it breaks it down to a level where we can understand where people are at. Almost 2/3 of millennial homeowners that's aged 23 to 38 have buyer's remorse over their home purchase. The most common regret among millennials is that they did not adequately anticipate unexpected maintenance costs. If you are a homeowner, you know the drill. Things break. Maybe it's the roof, maybe you need some new paint, maybe something's wrong with the driveway, the garage door, windows, and so on. And of course, older homes, they're tending to need more upgrades as time goes on. This can't be avoided, but people don't understand that. They get in over their heads and then suddenly they're trapped. What are they gonna do? Well, that's what today's video is really about. All of these different articles I'll show you are referencing the same data, but there's a few points that I want to make along the way. One of the complaints that they had, and I believe this is more pervasive than they're willing to admit, is that they took on a larger mortgage payment than they can handle. Big mistake, and as interest rates rise, they will feel a heavier and heavier burden. Though a majority of Americans want to buy, more than half say they don't have enough income to buy a home. Nearly half, 41%, say they can't afford a down payment or closing costs. Other reasons include bad credit and too much debt. Look, there's a problem right now because you have individuals that can't afford a down payment on the average home. Does that make sense to anybody? This is the way that I want to present this information to you. I'm not talking about the fact that real estate has risen. If I go back 100 years and I compare it to today, real estate has risen. Over the last 20 years, real estate has risen. But that's not what I'm talking about. The assets are constantly going up nominally because the value of the currency is depreciating. The problem is that incomes do not match with what we are seeing with these different assets. That's a huge problem that is not being acknowledged by the mainstream and by individuals themselves. Don't they realize it? If they're already in the game, maybe they don't. When I look at a particular asset, in this case real estate, it's a very common thing. Everybody has to live somewhere. It shouldn't be a speculative gamble. That's not something that I believe should take place. You have the average income, average household income or median household income versus the median price of a home. If you look at the two, over the years, it's been a disaster. They are diverging considerably, and there's no reason for this. Why in the world would this ever be the case other than we have all the speculation, we have all the easy money, and it's flowing somewhere. In this case here, we happen to see that it's flowing into real estate, one asset in particular. And of course, student loans are one of the biggest factors for what we are seeing today. Student loans continue to increase. I believe the statistic that I read just recently was $37,000 worth is the average. Imagine that. The average person graduating from college is left with $37,000 of debt. How in the world are they ever going to move into a new place, save up for a new place, when they have that student debt clawing at them, holding them back? Nearly 2/3 of millennial homeowners have regrets about their purchase, according to this survey. This is directly from bankrate.com. I'll show you two charts in just a second. One of the points that I'm going to highlight in a minute is the fact that 56% had no buyer's remorse. So we need to highlight that as well. Right at the bottom, I don't regret my home purchase, 56%. Among US homeowners, these were the most common areas of remorse. Number one, maintenance and other costs more expensive than expected. People do not account for problems to happen. Everything has to go perfectly. It's like the trade deal with China and the US. The market right now is pricing in perfection. If anything goes wrong, then we have a big issue with the markets. But as long as everything goes perfectly, then everything can continue swimmingly. Further down the list, we see mortgage payment is too high, didn't get the best mortgage rate, and bought too big of a house. Well, I think everything is going to change in a matter of time. As this debt compounds, as the situation worsens, whether it's their mortgage, whether it's their student debt, whether it's their credit cards, or personal line of credits, or home equity line of credits, doesn't matter. Eventually, this cannot keep up. There's no way. It's impossible. And of course, as this compounds, they are going to be met with a situation they can't handle. So they're going to go into bankruptcy. They're going to drop that home. They're going to walk away. They're going to have to default. And that, of course, has a detrimental effect on the economy as a whole, because it starts to cascade. It starts to result in businesses going down, the bailouts, the derivatives. We've seen it all before. In this chart here, we're looking at what Americans say is preventing them from home ownership. The most common barriers to home ownership, number one, I don't have enough income. And that shouldn't surprise anybody because, as I said, compare the household income. That's not one individual necessarily. That's household income compared to the average home. It has gone into astronomical levels. The two have diverged considerably, and unfortunately, it doesn't look to be any better. It's not as if wages are rising to a level that will eventually catch up with these prices. Even in the last cycle, when we had seen all of the prices come down in real estate, it still never got back to fair value. That's how crazy it is. Despite how severe the crash was, it didn't even go back down to a level. It became much more reasonable, certainly, but still wasn't. And that's why you have many areas around that are just suffering economically. Number two was can't afford the down payment and closing costs. If you can't afford that, you can't buy the home. I don't understand why people are really pushing themselves to the absolute edge, and then they realize, oh, wait a minute, I can't afford the lawyer. Oh, I didn't think I would have to buy this piece and that piece for my home. Oh, wait a minute, this appliance wasn't even working and I didn't realize that, and now it's been 3 months, and so on. Things happen. It's just the way it is. This chart out of Bloomberg highlights that young adults with college degrees and student debt are left with a negative median net wealth. That is very telling. It compares 1989 to 2016, and unfortunately for a lot of people today, they are considerably worse off than they were 10, 20, 30, 40 years ago, and so on. I don't know what they expect to do, but the current policies that are in place right now are actually making the situation worse. Young adult home ownership, U.S. home ownership among young adults is on the rise, but considerably below the pre-recession peak levels still. 35 and under, you can see what has happened over the years on this chart. Yes, it is rising from the bottom, which appears to be, let's say, 2016, 2017 timeframe, but there's no possible way that this will ever be rectified unless prices crash down to a level that is below what we saw during the housing crisis. And I'm not sure it's going to get there. And that's not a good thing. We need to see the prices fall down considerably. That would be beneficial. Of course, in the short term, it's not good for those who have overexposed themselves. But think about how many people would be able to get in, all the businesses that can be built afterwards. There's a lot of potential that results in a crisis. Whether that's good or bad, I'm just highlighting that. Other millennial regrets. Having underestimated the total cost of owning a home may be the biggest regret among millennial buyers, but location also plays a role. About 10% of those polled say that the biggest regret stems from where they bought their home. They are settling for homes in less than ideal neighborhoods. This is something that I see around the Toronto area myself. When the real estate was going crazy leading up to April 2017, which was essentially the peak, we saw areas that were suburbs, okay? I am talking about an hour away from the main city that were going for over $1 million on a home, 800,000, and of course this is Canadian dollars. But the prices went up to such a incredible degree, you wouldn't believe it. And these are suburban homes. This is not in the main city near the financial center or in the most desirable areas around the city where, yes, you do see insane prices that are still going on today. That's not the case. We're talking about people who have to commute into work on the train. They can't even get there by driving because the time it would take would be too considerable. This right here shows us what people are willing to do, and then they're thinking, oh my goodness, it's gonna take me an hour and a half just to get to work every single day. Maybe I made a big mistake. Well, that's what's happening, and unfortunately, it's not looking like people are getting wise to these facts. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel, so I do appreciate that very much. And last but not least, if you want the financial education you weren't taught in school, these two books have everything that you need. You could check them out at the link in the description. I talk a lot about real estate in here. Of course, I talk about debt as well in both of these books, so definitely check it out at the link. If you want the audiobook, that's available at themoneygps.com. If you want to find out about college, debt, and the economic aspects of it, definitely check out this video. Just click on it and I'll see you there.